Good afternoon, everyone. Thank you for spending your valuable time with the Adapt 2030 channel. We'll need Nikola Tesla map to multiplication to figure this one out. Swaps to LIBOR, 60 trillion in conversions. Actually, it's 223 trillion, and there's 31 days to figure it out. 2023, the year. SOFR will supplant and replace LIBOR. And from the horse's mouth, the transition represents a huge change in the plumbing of the global financial system. Wonder why things are changing? It's nearly the same amount of change if these pyramids in Antarctica, how it would rewrite human history. Robust and transparent. Wait, transparent only with blockchain, central bank digital currencies. The dollar dominance of overnight loans is going to be split into multiple factions from now. Blinding storm of financial upset in 30 days. Perhaps that's why they're not allowing you to withdraw cash. And I'm going to need a couple inquisitive friends to help me figure this out. Since Washington clowns are part of the play, I thought I'd bring some sea otters. At least they're more honest. Everybody's been asking, why is this cash withdrawal such a problem? I would jump over to NatWest again. Over in the UK, if you want to withdraw the more than 2,000 pounds, they're going to need an invoice. What if I need a piece of farm machinery? I pay cash. What if I go to a lumber mill and I pay cash? Too bad. If you're not in the system, you're not allowed to use the money. And we could see this coordinated play everywhere. Iraq bans the US dollar. Transactions to boost local currency. And we might think it's like an organic thing where everybody's like, all right, I'm done with the dollar, done with the dollar. And news of the day, Russia-China trade booming. And if we look down in that second paragraph talking about China and Russia, growth imports, exports amongst themselves, 33.6 billion. We'll see how many times 33 pops up in today's video. And that's all without using the US dollar, at least 200 billion more taken out of the transaction coffers. Argentina ramping up interest rates 97%. You were squibbling about 7 or 8% for home loans. What about a 97% house loan? I don't think so. But the close, Dow Jones, there's that 33 again. What can I say? Keeps popping up anytime we see news reports that are of a certain stage play. The numbers are marked within it. Because what we are seeing is the world's greatest stage play. It'll all make total sense once you understand this little nugget here called SOFR. It's going to supplant the LIBOR, which is the London Interbank Overnight Rate, which was how banks lend to banks to use the money overnight, literally, to meet reserve requirements. And it used to be the dominant benchmark for dollar-dominated derivatives and credit products, but we see the world right now going away from the dollar. Is that because they're going away from the dollar, or is it because LIBOR is splitting into multi-factions from London to the EU to Japan? And it's all going to be under the new guise of secured overnight financing rates, SOFR. When this hit my desk at 11:11, talking about the swap market bracing for 60 trillion in LIBOR conversions, I remember Lynette Zhang at ITM Trading talking about this many a year ago with regular updates about the conversion of SOFR. And I thought that is incredible, interesting. But it's not really just 60 trillion because I did go to the Federal Reserve. Hey friends. I notice I'm having more energy and mental focus when I take C60 EVO. Their C60 EVO organic olive oil is delicious. I take it on a spoon in the morning. Sometimes I also put their MCT coconut oil in my coffee. Gives my morning a good boost. My pets love C60 EVO oils too. The face and lip serums are potent products that really work. Check out the testimonials on their website. Invest in yourself, your pets, and those you love with C60 EVO because you're worth it. Feel focused, energetic, and rested today. C60EVO.com/adapt2030. You're going to enjoy discounts on bundled items and monthly subscriptions. Use the promo code ADAPT2030 at checkout to take an additional 10% off your order. That's c60evo.com/adapt2030. And now on with the video. And the Bank for International Settlements, along with Bloomberg, and everything is listed below in the description box for you to do your own research. I'll see you in a couple weeks after you come up for a breath. LIBOR exposure right now is $223 trillion currently outstanding, meaning they haven't converted yet. And the maturity is $74 trillion, still higher than the 60 if you want to be a purist. So we're coming to a new system. Who would have known? With all the contagion and the craziness around the world, it's all encompassing. This is all a stage play, what we're seeing. Everything has to be converted over what used to be only used in the dollar arena into this new system. It's going to be collateralized, meaning there's going to be U.S. treasuries for part of it as the actual physical something behind the debt. Before, the LIBOR rates didn't need that. There was no collateral. But in the new system, there will be collateral. It'll be based around U.S. treasuries, at least part of it. There needed to be an excuse to print an enormous amount of money that occurred in 2019 and 20. Gee, I wonder what that would have been. Have you seen everything move away from the dollar now and you think it was organic that the way it was and the bricks just popped out of nowhere in just this particular time and all that money swept aside? And now we're looking at a complete restructuring of global finance here by the 30th of June. And you start to see a lot of whispers in the wind about things happening in June. This is exactly what they're referencing. And also, there is a huge disconnect, and when I say huge, it's just percentages of points here between what the SOFR rates are and the LIBOR rates. So there's going to be a fallback spread in that. SOFR rates currently 5.06, that was on May 25th. But the LIBOR rates, there's this little spread in between there, which affects the full value of all the derivative contracts, and that is directly related to the value of stock market listed corporations, loans and contracts, and interest rate payments. That spread might only be 0.11, but when you're talking trillions or quadrillions of dollars, because derivatives are usually at 1,000 to 1, that's an enormous amount of money. So JP Morgan, preferred alternative to USD LIBOR, they're going to be the leaders for the United States in this transition and market quoting system through the Federal Reserve. And you can also use the ARRC, which was founded in 2014. And then you go back in and you go, whoa. This has all been 2018, 2014, 2015. They're talking about central bank digital currencies that weren't, but now they are. Wait a minute. This has been planned. These are the greatest stage actors of all time. Hello. So far, goodbye, LIBOR. And what is the secured overnight financing rate? It's going to be the new global interest rate, depending on region, that was dollar denominated, replacing the London Interbank Offered Rate, or overnight rate as many call it. But here's the thing in blue. It's expected to increase long-term liquidity, i.e. ripple net on-demand liquidity, and also substantial short-term trading volatility in derivatives, which currently at $601 trillion in derivatives across the planet that are normally leveraged 1,000 to 1. We're in the quadrillion dollar range here. But these numbers are so mind-boggling on how much is intertwined and how much has to come unwound and reset in the new system. They tried to do a mass conversion in 2021. It just didn't work. That's why we're pushing it back, and this is the final date. No more contracts have been issued in LIBOR rates. It's done. That is the end. The transition challenges. The new benchmark is going to be difficult. Oh, yes, it is. So just to put it in perspective here, the 3-month US dollar LIBOR is going to flip some $200 trillion of debt, mature at any time from 3 months, 6 months, 1 year, 5 year, 10 year, 30 year, 15 year, whatever into the future, needs to be reassessed and put into the new. But how do you do that when the old contract doesn't fit the new interest rates of the new SOFR? See, this is where the problem lies. And it keeps repeated again and again. The SOFR is going to have the greatest impact on derivatives markets. But here's the thing. If you're holding an adjustable rate mortgage, private student loan, or debt instruments, i.e. commercial paper, get ready for seismic changes that were unexpected in your life. Now, the LIBOR cessation countdown clock, 31 days, 19 hours, 35 minutes since I grabbed this screen on the 29th of May. Now, this is so interesting. What happens after LIBOR ceases? Well, the SOFR ahead, they're going to use that fallback methodology, and that's where you come into that spread where I showed you 0.11%. You see why there's so much disruption in the market, and everybody's playing their part to explain away why it's being so disrupted, and everybody's moving to the bricks. Or are they really moving to SOFR from LIBOR? Now, the UK Financial Conduct Authority discontinue. Oh, wait, they tried it at the end of 2021. It didn't work. Now they're pushing it back to June 30th. They really can't do it anymore. They can't kick it further down because with no new contracts written in LIBOR rates, it is a sealed deal. You know, so many countries used to borrow debt in US dollars. Now they can choose which market to go to, which is also a reason that people are going away from the dollar. It's not just bricks. I mean, this is such a gargantuan shift. You know, these images coming out of Antarctica with possible pyramidal structures that are very similar to the way the pyramids of Giza are constructed in their alignments. If this was true, imagine the rewriting of human history that it would have to do, the shaking of the very foundations of how long humanity has been in place with civilization torn to the core and rebuilt. A new timeline is no different than what is about to happen with LIBOR and SOFR rates. If this is a pyramid in Antarctica, can you imagine that everything we knew was wrong and it would have to be rewritten? What if this really was a Sphinx formation in the Grand Canyon? At the size and magnitude of that, there were giants on the planet. We would have to rewrite everything we know about human civilization. Well, this LIBOR SOFR conversion is the exact same thing, but in a monetary sense. This is why you're seeing the rollout of everything happening at the exact same time right now. The central bank digital currencies, the shift away to bricks, the high inflation, soon to be hyperinflation. There has to be the central banks and these financial institutions, stocks issued against company debt and whatever they're holding for contracts on derivatives, they are not going to take the hit. You are. I am. This inflation is nothing more than building in that 0.11% on the difference of that, scraping it from the public across the planet. It's not just exclusively into the U.S. That money needs to come from somewhere. Nothing can go negative, and that loss can't happen. That is a full destruction of every financial market. Oh, wait. You have to destroy the markets down to full collapse before you can bring back a new system. Now, perhaps that's the plan. Now, if it hyperinflates, you know, that initial beginning of hyperinflation where it goes 1x, 2x, oh, wait, we're already in the 3x phase, 4x phase. Like if you look back at the price of your food and say 2018 compared to now, it's like 3 to 4 times more expensive easily. That's all pre-scraped revenues to try to equal the differences. They knew the SOFR and LIBOR rates weren't going to match. Now, send it in hyperinflation, when we get to the 10x, 20x, people are still going to be paying that. But you know what? That's all going to be scraped aside. Oh, we can't. This is the no-loss jar. This is my no-loss jar right here of preparing for food. You know, food's going to get really expensive. Imagine when the only place you can get food is through an approved zone. Stay away from that for a little bit. So the key difference is LIBOR green. It actually should be red because it's old. Notice on that fourth line down, the secured rate collateralizing using U.S. Treasuries. And they're also going to have a backward-looking rate, which means they're going to need some kind of distributed ledger technology settlement to be able to look back to see that within hours or a day to know what the future payments might be. And that last line, based on known interest payments and the next interest payment date, again, that's DLT. You're going to have to do that. Distributed ledger, and RippleNet is the only thing that offers that particular service in this magnitude of finance. So off of Forbes Advisor, how does SOFR work? Since 2019, billions of dollars in floating rate notes tied to SOFR were issued in the U.S. Wait a minute. I mean, there had to be an event to allow more issuance of just gargantuan amount of money. Gee, I wonder what happened in 2019 that would allow that. Trying to think back. Can't think of anything really significant that happened around 2019 or 20 that would have allowed endless money printing so nobody would ask a question. And the overnight financing rate here as well. Observable transactions other than estimated borrowing rates. That all goes back to DLT. And robust and transparent method. The only thing I know with transparent is central bank digital currencies, otherwise known as cryptocurrencies issued by governments. So we need to come to Nikola Tesla. That 12-12-12 is December 12th, 1912. Puts out the composites and primes on the map to multiplication. We need it because I'm confused, and you will be too when you start to see these two rates are very different. We're talking an enormous amount of trillions of dollars of difference here on this chart. Just based on the amount of magnitude, let's just leave it at $600 trillion in derivatives. These two different interest rates on those same contracts, you do the math yourself. Do a 0.11% difference on 610 trillion, and you tell me how much money that turns out to be. Sonia, Tonar, Saran. These are overnight index rates for different parts of the world. Switzerland, EU, Britain, and might I add in now, Japan with the tonar. So there are alternatives, and you see why the dollar's not being used, and everybody's talking about BRICS going away from it, but really it's just a switch over to SOFR. Ionia, this is the Euro overnight index average. Look how that's going to switch. And if we go to Japan, the tona, the difference in the rates there too, which would be different from the LIBOR rates. So wherever you look, there's a difference in rates, and this is going to cause a huge, massive problem. You might want to get a little more prepared because this is actually in our face, 31 days. That's why I'll always suggest trueleafmarket.com. Heirloom organic seeds for any grow zone on the planet. It's only June. We can still plant and grow food for the next 4 to 5 months. You're lucky it's in the summer, not the winter during this time. And consider some storable foods. My Patriot Supply and Adapt 2030. 3-month emergency food supply. That link's in the description box, again, with everything that I did for research for this video so you can understand this conversion from LIBOR to SOFR. All the links are in there. There's about 15 links for you to follow. You need to do your own research to see how to protect yourself because one size does not fit all for solutions moving through this changeover in monetary system. I do wish you the best in your preparation. Thanks for watching. I'll see you next time. Bye for now.